About those movements, we've got Makwe Masilela from Makwe Fund Managers. A very good evening to you, Makwe. Now, traditionally, the JSE movements are largely driven by what's happening globally. But I've got the feeling that the JSE and the weakness that we've seen in the local currency are more a local story now. There are increasing concerns about South Africa's economic trajectory and really a lot of uncertainty coming through from key stakeholders like government that are supposed to be providing the kind of direction that investors want to see. Your thoughts on the market performance today, but also the rand reaching new lows again in the intraday trading?
Yeah, definitely. Market continue to be anxious because of that, the debt ceiling that has been reached, the deal thereof. But now the question is, how will it go through the Congress? So people are watching all that. And remember, one of the conditions is that the guys have to cut spending. And in the recent times, we've seen the U.S. economy being boosted by government spending. So if that's one of the conditions to cut spending, then definitely that's going to hit the economy. And yes, you are right, back home here, the issue about load shedding is now a serious matter. As we have indicated in our intro, some of the companies, as they report, they continue to show us that this is a very big problem. And anyway, generally, the economy is not doing okay, all for the obvious reasons other than load shedding, structural reforms. Hence, we can see the consumers continue to struggle. And unfortunately, a weaker rand had a very negative impact when it comes to our financials. And yes, we've seen earlier in the session that the dollar was strong because expectations that U.S. interest rates will continue to go up, continue to rise. But that dollar gave back some of the gains. But if you get the likes of the Reserve Bank stating yesterday that one of the factors that they're factoring in as one of the headwinds is the potential sanctions that we might get from the U.S., are not too happy about that diplomatic immunity that has been given, then it becomes a big issue. If you get the Reserve Bank, the JSE, and other financial institutions are saying they're preparing, for the West, that we might have a great failure, then definitely that will continue to have a negative impact when it comes to the currency. And not forgetting that people are looking forward to 2024 elections because that's another political uncertainty.
Yeah, no, it's very fitting then that I wear black on this day because you've just painted a very grim picture, Makwe. And those sentiments that you've just expressed, they filter through to the likes of a Pepcore. Lower income households are its targets, and even that is struggling, something that usually does very well for them. They're indicating that it was a tough time for them in the interim period, and it looks like things are going to get worse. So obviously, they are the owners of Pep, Ackermans, Russells, and Hi-Fi Corporation. What did you make of that interim statement?
Not looking okay, and that is why the markets reacted the way they did. I mean, if you look at them, the guys had headline earnings per share dropping by almost 11.7% because they had a wrong mix when it comes to their summer fashion because people didn't like all that. And load shedding, as you said, is even impacting some of their customers to earn income. And we are talking about an environment where anyway, the consumer is struggling. And the guys did a survey as well. They've realized that their customers are starting to spend money on the basic necessities. So hence they're no longer spending much as they use on the other things. But if you look at them, look at Capfin. I mean, these guys, they've managed to grow their loan book by 15%. That confirms that people are struggling. They have to tap into loans like that to be able to survive for the month. So that doesn't bode well for economy going forward. But yes, as it is now, we expect to see that the U.S., the local economy, including South African eNCA companies, are going to continue to struggle, all because of the economic outlook. Come next week, Tuesday, when you get that GDP data, most probably it will show that we got into a technical recession.
That's very worrying, and that is a big thing that we'll be focusing on, Makwe. And that the spending pattern of consumers that you've just described there, shown in Tiger Brands' results today, them saying people don't buy condiments and canned vegetables anymore. They focus on the bare necessities. Another worrying story of a big producer of food saying these costs are going to go onto the consumer, like it or not.
And that's a harsh reality. I mean, look at their earnings, just up 0.2%. Yes, dividends still unchanged, but yes, they managed to grow that revenue by 16%. But all because the guys had a food price inflation of almost 17%. That's even more than the food inflation that has been by Dan Stats SA. And it continues to show you that, yes, the consumer is struggling. They have to make sure that they just keep it to the basics and look at their volumes. The overall volumes down 1%. We've seen some nice pickup when it comes to bakeries, stuff like that. But look at the flour that they're selling to retailers or wholesalers. The volume have also dropped.
Yeah, no, absolutely bleak outlook for South African Inc., as you say. Makwe Masilela from Makwe Fund Managers joining us this evening. Thank you very much for that market wrap discussion this evening. And Sally, that's where we've left it with Makwe Masilela. Not a great picture that he's painted at all.
Yeah, absolutely not. Worrying times indeed. We've just